Welcome to the Happy Cows Eat Smart podcast, brought to you by Novus AgriScience, where your dairy's business success is our passion. In our monthly podcast, we cover updates and insights within Federal Milk Order 33. Our team of expert ruminant nutritionists delivers research-backed, custom feed solutions tailored to your herd, because we know every farm is unique and no two solutions should ever be the same. We go beyond nutrition. Through robust tracking of herd metrics and financial benchmarking, we help you optimize costs, boost performance, and build profitability so you can focus on what matters: happy cows and a thriving business. So whether you're tuning in from your office or your truck, join us each month for insights, stories, and strategies that promote herd health, farm performance, and dairy success. Let's make your business thrive, one episode at a time. And now, Dr. Lawrence Jones will share his insights for Federal Milk Marketing Order 33.
Thank you, Ben. And now where I wanted to get started was the milk checks that should be either in your mailbox or showing up here pretty quick. So overall for the month of October, the fat percent came up, the protein percent came up, while the fat price came down and the protein price went up. So those all ended up with about a $20 per hundredweight value, which was down 78 cents from last month. Now, if you look at the statistical uniform prices, it was $17.43, and then once you adjust for the components, it's $20, which is exactly where we ended up. So again, about a 78-cent price change. So we'll plot out the statistical uniform prices. Now remember, these are 3.5%, and more or less we're at the high that we had back here in 2019, way off of this high that we had in the middle of 2022. And definitely down from where we were just a few months ago. Now, what drives your statistical uniform price? There are really two big pieces. One is the percent of the different classes, and then obviously the price for the different classes. Now, overall in your order, there was no significant change in depooling, so I'm not going to worry about those percentages in this program. But one of the things I do want to remind you of is the fact that once we get into December, the Class 1 skim price will increase a little bit because they're going to change the underlying values of protein and other solids. For example, other solids go from like 5.8% up to 6, and protein is going to go up to 3.3. So if we look at the history of the Class 1 prices, we had our high about a year ago at $22.53, our low back here in June. But you're going to say, hey, Larry, you just said that was not $18.04, but $21.84. That's because in order 33, we add $3.80. So this graph stays the same for you, except it is a shift up by $3.80 with the new federal milk marketing premiums that came in June. And remember, since June, we've had Class 1 skim be the higher of 3 and 4 as opposed to the average plus 74. When you look at that, it's interesting to look out the next 12 months. Right now, Class 3 is higher than Class 4, but there's about a $1.72 difference between these. So having the higher of is probably better than the average plus 74. And again, when you look at the average plus 74, you need to multiply that by 2 to get 148. So right now, it's kind of going to be a toss here in the end of the year as to whether the higher of or the average plus 74 is the better solution. So Class 3 came down to a low of $16.91. It was down 68 cents, again off of our high of $20 back here in January. These are the futures as of Friday. It looks like it's going to go up and then back down a little bit, but right now these futures are trending up. We'll talk about that here in just a minute. It's always interesting to look at the history of the October contract going back 6 months. It was $1.70 higher. It ran up to 1945 all the way down to 1632 before it settled in here. Class 3 is made up of protein and other solids. For the skim price, protein had a low back here in July at $1.87, and we've now hit the high at $2.88 here 3 months later. These look like they're going to go up just a little bit and then trail off. Again, we'll have to see if pattern's going to hold, but right now protein has been relatively strong. Now protein's been coming up in your milk. You were 335, last year 330, so 5 ticks going up. And for the federal order, there were some significantly higher numbers in the Northwest at 352, Texas at 352, and here's your 335. Again, protein is not recorded in all the different federal orders. Other solids are continuing to get stronger, and whey was up again today, so it was up 2 cents to 34 cents, off of that low back here in June of 29 and off of the high of 54 back here in July. The class 3 price will stay at 3.5% fat. Now, fat's been under a lot of pressure. We had a high of $3 a year ago. Now we've hit the low of $1.83, down 37 cents. And this is going to fall off and then head up a little bit. What's going on with fat? Well, basically, there's way too much of it. You guys are at 431, up from 420. So that's up 11 ticks. This is just a significant rise in order 33. Now, one of my sources are telling me that one of the co-ops in Michigan has now put in a quota on percent fat. I don't have any of the details on that yet, but I'd like to know if anybody knows anything about that. Across the nation, fat was very strong. It was up 9 ticks from September, the highest in the Northwest at 453. Here's your 431, and then Florida's even pushing 4 pretty hard at 399. Class 4 prices have been really under pressure. We came off that high of 21.12. We're now down at the low of 14.30. Basically, non-fat dry milk and butter have just been driving these down. Looks like it's going to break at 13 and then head up into the 14s, but way off of where that class 4 has been historically. So let's kind of focus now on what's likely to impact your milk check in the future. Again, we've seen this graph earlier. Both class 3 and class 4 are headed up over time. Now, there are those that argue that there's just going to be way too much butter and cheese to make this happen, but at this point, that's how they're pointing. Here are your DRP values. Again, the Q4 is already pretty well gone here, but these are the DRP values if you want to lock in DRP. But right now, for the next year, we've got a 1694 for class 3 and 1522. And they say futures are up a little bit as I'm recording this. All right, the big story of cow numbers. This has just gone crazy. We were 9.353 a year ago. We're 9.581. That's a gain of 226,000 cows in a year. And in fact, if you go back to the low, it's even more than that. But this has just skyrocketed. At the same time, we hit an all-time high in daily production for September. Now, one of the problems is everybody's comparing this to a year ago. We're up 4%, but if you look at that long-term trend, we're pretty much on it now. So I suspect that the better year-over-year comparison was going to be back, to that trend line, and so that's not up quite that 4.5% that everybody's reporting at this point. Milk per cow continues to go up, and we hit an all-time high in September, but it's not on that old trend line at this point, so that has kind of slowed down just a little bit, but that is an all-time high for September. So when you put all this together, my prediction for the agricultural prices is that fat across the nation will be about 4.24, and if we do that, we're going to be up 5.8% year over year, so a significant rise in fat production. So this is a graph of the spot market in red, the National Dairy Sales Report in blue, and then my predictions in green. And what we're interested in for November is these 4 points, and we've already got one of the November National Dairy Sales Reports. We've got 3 more to go. And in my weekly podcast, I made a comment that where these 3 points are going to end up relative to this next week is really, really important. Because whenever we had spot market down here, we still had National Dairy Sales Report in the 70s. And if this pops up back into the 160s, and then this December contract is going to be quite a bit higher. And right now, December is up about 20 cents because the spot market was up 1.75 cents on block. So I think December is much higher than what I've got here. When I recorded this, the guess by the trade and mine are exactly the same for November. So this would look like they're pretty good numbers for November. The whey has been getting really, really strong. And again, if we look at the next 4 weeks, we just got an upward trend here. And today, whey hit 78 cents. So it's continuing to move up a little bit. But across these 4 points, the trade was at 64.4. My guesstimate is 65. So I think, again, a pretty good set of numbers. I think that is where November is going to end up. The thing that's really impacting farms right now is black calves. So I'm looking at the January feeder numbers. We're at $3.80. Of course, there's an administration push to drive this down. So this is driven down to $3.20. So we pulled 60 cents off of those feeder prices. But historically, a really good number. I mean, back here in April, we were 270. So we're 50 cents above where we were just 6-8 months ago. We're not getting export data. We're not getting a cold storage report. We don't have the dairy products report, so we don't have a real good estimate of demand. And in fact, we've got a global dairy trade tomorrow, but I didn't want to hold this up for that. So on the last global dairy trade, cheddar was 202. Our spot market Friday was $1.54. So we should be exporting cheese, and of course we always should be exporting butter, but we just don't have the right kind of butter for the international market. But the global dairy trade is still at a fairly high premium to our cheese market. So that would suggest that exports should be fairly strong when we actually get the data. But this global dairy trade overall has been down since July, and it's pretty well a linear trend. It was down probably a bit more in September, but we are just trending down on the world prices. So the other thing that is going to be impacting our prices is the fact that we're going to have a change in the spot market, as I said, with the skim prices changing here in December. So the green line is spot plus 40, which is a combination of the old and the new calculations. And so the contracts are below it in January and February. And so there's this push and pull on the market as to whether the future is going to come up or the spot market is going to come down. But I'm hoping that we can, kind of get at least 17 out of these class 3 contracts. There is some evidence that we're in kind of a bottom. So this graph is a cumulative change. So every day I take the average of the next 12 months of contracts and compare it to yesterday. I started this back in June of last year. After that, we ran up about $1.50, and then we've just been slowly coming down. And right now, I would say we're in kind of a bottom flattening pattern, and hopefully that this will start to come up here, and we found the bottom on the dairy market. There's just as much chaos in the grains market. So this is the data as of Friday. It was a good week for soybean meal. It's up almost $6 a ton. And if we put in this trend that we've got for soybean meal, we're at the very top of the resistance, and we've been well off of the support. So again, locking this in back here in the midsummer for the year would have been the right thing to do. We also did get the November WASDE report. Now everybody calls the November report a dud, but overall the ending stocks for 2026 were very supportive for beans. That's why I put in the soybean meal. Total production is supportive for soybeans. So again, consistent. And then the yields, they didn't change the soybean meal, and they left corn at 186. And Naomi Bloom was on Market to Market on Friday and suggested this should be 180 to 181. So there's a good chance here in January that this corn yield will be dropped. And just finally on weather, because we've had this polar vortex that's hit most of us. Jet stream is very much in a north-south kind of movement, and the big story is this high pressure out here off the coast. The higher this gets, the more cold that's going to come in, and the more that it moves east or west will decide whether this cold is east or west. But right now it's centered on western United States, which gives us the 6 to 10 day outlook, which is cold in the west, warm in the east. And then we're also going to have a high that opens up the Gulf and sends moisture into, kind of the Oklahoma, West Texas area there. But one of the things that we've got to keep an eye on is the drought monitor, because if ground freezes without a lot of moisture in it, then we're going to lock that drought in, and a lot of order 33 is at least in dry to severe to extreme drought area, particularly that northwest Ohio. This is what I had for you this month, Ben, so back to you.
Thank you, Larry. Novus AgriScience hopes you found this information insightful and look forward to next month's installment.